The rand strengthened a little earlier this morning as fears of an all-out war over Ukraine receded and investors' focus shifted back onto the national budget. Finance Minister Enoch Godongwana is expected to walk a tightrope between allocating funds for social spending and sovereign debt repayments. For more on what to expect, we are joined by Jones Gondo, a senior research analyst at Nedbank. Jones, thanks so much for your time this afternoon. Quite an interesting day, and some saying that this particular budget will likely be optimistic given the tailwinds that we got from the commodity prices. What will you be looking out for?
Yes, I think we've really been given the promise of a revenue overshoot, which gives the sovereign a lot of options about how, breathing room about how they prioritize their debt going forward and their funding requirements. But what we're really looking for is that, the expenditure control and the reallocation of spending from what was, a pandemic extraordinary time to reallocating that for orientating the economy for growth. So the balance between social spending and investment spending is important to us.
The one aspect when we talk about this commodity price windfall is that I suppose for him it's quite difficult to try and introduce permanent expenditure line items, especially when they won't be matched with equivalent, permanent revenue stream. I suppose that makes it quite difficult for him, right?
Yes, no, it certainly does. And I think this, is the conundrum. So to really kind of see exactly what direction they're going for the balance, it's not really to look at this year's particular budget, but looking at how they forecast the spending and revenue balance in terms of what they call the primary balance, that it does actually balance towards the outer years. The National Treasury for the last few years has been sort of kicking the can down the road to a future point where we'll achieve fiscal balance. But it's important that this is hard and fast this time around, given that we've got this windfall behind us. Of course, it's not expected that we repeat these sort of revenue windfalls in each year going forward. And so it's quite important that they're conservative on revenue going forward.
Right. The one aspect we did see is that during the State of the Nation address, President Cyril Ramaphosa had a really bold policy vision, and that was expressed that evening of SONA. In order to reignite the economy, which is what everyone's been talking about for the past couple of years, how exactly should we be able to do that? What are the low-hanging fruits?
Look, I think the reform plans remain the same. We know that for spectrum, for the telecoms industry is the first step. We've been waiting for that for at least 2 or 3 years. And I think that is going to unlock a lot of new investment in telecommunication services. The second really is to understand how they're reforming the energy sector. We saw, the president going from 100 megawatts for embedded generation. That needs to be followed through by further, deregulation from at least this side to allow companies to start to understand how they price for feed-in tariffs going forward. And that will bring back quite a bit of confidence because, for any international investors or local investors looking to new capacity, electricity was a big constraint. And if they can make a plan around that, that will make a big difference. And finally, it's just transport and logistics. The reforms around that, it just prices us out of an international economy where we need to get goods in supply chains, global supply chains on time, and at an international price that makes sense. So those inefficiencies really have curtailed growth and potential growth.
What would make the credit rating agencies happy? Because no doubt they will be paying attention to this particular budget.
I think it's the expenditure control, right? So one of the big things that was really growing was the government wage bill. And as a recurrent expenditure, the pace at which it was growing was faster than we could collect revenues. What that means is we were starting to borrow to pay for consumption today, or borrowing from tomorrow to pay for consumption today. And that didn't have a stimulatory effect on consumption in the economy. So what they're looking for is just reining that back in so that we know that the debt trajectory stabilizes. Once you can get a balance between recurrent expenditure and current income, then at least the government credit card is not being overmaxed.
Jones, let's leave it there, and adding to some of the aspects that Jones has touched on, some analysts saying that low trend growth, sluggish reforms and medium-term fiscal risk is what Jones touched on in that particular interview, might paint a more bearish picture for some of those sovereign ratings, especially in the medium to longer term.